Here.
Trustee Carusel. Oh, he's absent today. And Trustee Jay. And we have Trustee Chaplin as an alternate. And she is online. Okay. See her face, but she didn't say here. Hi, Carol, we see you. I don't know if she can hear us. Trustee Chaplin, can you hear me? I'm going to go with no.
Wave to her, make gestures.
Trustee Chaplin, can you hear us?
That's a big no.
Hand sign.
Testing. Testing.
Test, test, test.
Testing. Testing.
Oh, she can hear us.
Oh, yay.
Okay, great.
Trustee Chaplin, would you like to answer your roll call?
I'm here, thank you.
Murphy's Law.
Just trying to make sure the public can hear us.
Testing, testing 1, 2. Testing 1, 2.
Microphone is muted, hold on.
Testing 1, 2.
So incoming audio.
Well, it would come out of the speakers. And goes in here. I mean, so well, it's just muted. Just muted. Look it up, go into panels. Panels. Jack Black. Speakers. Here, come bring it right over here. I'm gonna unplug this microphone and plug it back in, and it should ask you what you wanted to make it. Headset. It's right, so we want headset. Not headphones. It's, that just tells it. Testing 1, 2. Testing 1, 2, 3. Testing 1, 2, 3. There it.
Or let the public.
Trustee Chaplin, can you hear me right now?
Yep, I can.
Yes. Okay, we just can't hear you. So I'm going to make the assumption that that means the rest of the public.
You have her promote us.
The idea of
now that state law has changed to expand the list of authorized investments. We'll be taking a look at them over the next year or so, and then coming back to the committee with a recommendation. So we're ready to do that today. Our investment portfolio totals about 96 million, contained in 3 sub portfolios representing our core investments, our debt service funds, and our liquid assets. It's a fixed income portfolio that's restricted by state law and by our own investment policy. It contains
On here, so I think it's up.
securities. And we're going to be talking about expanding that list in a few minutes. Our objectives in the management of our portfolio is primarily to preserve capital, to ensure that we have the liquidity to pay our bills, and then to also provide a market rate of return. Investment earnings is a significant part of our operating revenue. It generates about $1 million a year. Our portfolio is managed with the assistance of an investment consultant, Government Portfolio Advisors, or GPA, and we've been in contract with them as our consultant since June of 2017, following a competitive selection process. It's a fixed fee concept. You know, there are different types of investment management agreements. This one is a fixed fee, so there's no transactional benefit for the investment consultant to recommend one security over another. It's just a flat fixed fee. They are an extension of our fiduciary responsibility as a board and as your CFO. And the way it works generally is that GPA our portfolio, the market value changes on these securities on a daily basis, and investments mature, and then they will be in contact with me. I'll hear from them.
Recording in progress.
4 times a month. It's not a. We generally hold our securities until they mature, and when they mature, we look at options of how those proceeds are going to be reinvested. And now I'm just going to introduce. Oh, I'm supposed to move the slide. And now I want to just introduce Deanne Woodring, who is the president and senior portfolio manager for GPA, our investment consultant. She has over 20 years of experience managing portfolios for public agencies. She's a licensed investment advisor. She has over $20 billion in assets under management. She'll be discussing our portfolio performance as of March 31st, 2021. And then she'll be talking about these new investment types that we are recommending to the board to bring into the mix of potential investments. When we talk about investment types and allocations, it's not a managed portfolio in the sense that if we say 5% is authorized, that doesn't mean that we're investing 5%. That just means that we're authorized up to 5%. So there's no sudden flip of the switch and we have to make the portfolio look a particular way. It's a managed portfolio in the sense that our consultant recommends opportunities as they're presented in the market. So then we'll come back and we'll ask for the committee's recommendation. I would ask that you hang in there. It's going to be, a content-rich presentation. It will probably take us, a good 25 or 30 minutes to get through the information. And during the course of the presentation, if you should have any questions, please don't hesitate to ask as we go. So at this point, if Lori can bring Deanne and
Hopefully we can hear them.
Deanne, are you?
Good morning. Can you hear me okay?
I see her talking, but we cannot hear her, unfortunately.
I'm going to try again. Can you hear me?
Ask IT to help with that.
Listen. I apologize.
I'm going to test again. Can you hear me? Testing again. Can you hear me?
Deanne, if you could hear us, could you send a message to Lori indicating if you could hear us. or-
Yes, we know she can hear.
Okay.
Yeah, she can hear us. We cannot hear her.
Correct.
So Randy, how would you feel about us moving this item down and moving on to the next one in hopes that they'll get it fixed before the end of the meeting?
You can do that.
Would that
and
be
there's-
okay?
There's no sense of urgency with respect to this item, so it could always
We-
come back. We would prefer.
We are hearing that, that all of the attendees can hear. We just can't hear them in this room. Doesn't
Yes.
help, but
So we have one of two options. We can see if they can fix it before the end of the meeting. If they can, we'll move forward. If not, we could try again at the Thursday board meeting and do it
Yes.
for the whole board if they happen to be available again on Thursday. Okay, so I'm going to check in with that technical difficulty later in this meeting.
thank you.
Okay.
Thank you.
Oh, I'm sorry. Our board meeting is Friday this week. I apologize. So we're going to move on to 4.2, adoption, 2021-06-28, adoption of a Reno Tahoe Airport Authority fiscal year 2021-22 liability and property insurance program and approval of premiums in the amount of $1,156,999. And I believe we are going to hear from Alex Kovacs.
Morning, Madam Chair, trustees, Mr. Griffin. It is great to, hopefully you can all hear me since I, so we can go forward. For the record, Alex Kovacs, Manager of Finance, with the proposed liability and property insurance program for next fiscal year 21-22. Starting off, I would like to let you know that this was a very challenging process. Normally, you would be able to see this proposed packet for next fiscal year as part of the workers' comp insurance discussion, and that normally is in May. However, due to the fact that everybody is working from home, as were we for a period of time, difficult process, sure that we're able to present to the board a proper and the best available packet out there for next fiscal year. In addition to our health insurance and workers' comp insurance, we also have about 12 different lines of property and liability insurance, ranging from auto to equipment, public officials liability, and airport operators liability insurance. Our broker of record, who represents us in all matters of workers' comp, property, and liability insurance, is Arthur J. Gallagher. They started working with us in 2014 for the original 5-year term. That term was extended in October of 2018 for an additional 5 years through fiscal. I'd like to recognize them as part of this process because they did a fantastic job. They went out there, they aggressively marketed our many lines of insurance to be able to bring you the best options available out there. The property insurance currently with Zurich, they proposed the 13. IG was our long-term insurance carrier. I remember 2013. Well, the current actually came back with a proposal for a 3.5% decrease compared to the current year. The recommendation, $560,000. Difference in conditions or deep flood insurance brought to us by 3 different insurance companies for the combined coverage of plus, I should say. And that is best available for us. Changed the way we were marketing insurance for both inland marine and auto liability. The potential payout, as you know, same thing as for our personal cars, it would be based on an actual cash value. The values that we reported auto based on the going forward, we propose to make that change, and that's the reason you see a decrease. Also, the value insured has decreased for approximately $1 million, down to approximately 11 million. Auto liability, again, this is just for the liability portion of auto coverage, is increasing 8%. Coverage would be. Liability insurance currently with QBE, we're ending the 3-year rate guarantee with QBE, so we have not seen an increase there for the last 3 years. They're recommending or proposing an increase of 30% over the 3 years ago rate. AIG also indicated an approximately $150,000 annual premium for next fiscal year. However, we propose forward with for an public official liability, 5.5%. Cyber liability, this is where you see the highest percentage increase compared to the current fiscal year. And recommending bridge with there's a detailed description in the board memo for all of the bids that we receive for all of the different lines of coverage here. Currently, CFC has the best rate for us moving forward into next fiscal year. On this slide is a list of all 12 of the various lines of property, liability, and total of $1,999,000. It's interesting. Ends with overall, based on indication from Arthur G. Gallagher, there is a difficult hard insurance market out there. Total premium is an increase of approximately 44,000 or just below 4% from the current fiscal year premiums. Is below the approved budget. But here's the recommended. I move. Liability and property insurance authorizes the coverages of
Alex, thank you so much. That was a very detailed and great explanation of how everything worked out. Does anyone have any questions? Go ahead, Trustee Jay.
Thank you very much, Alex. Your detail is amazing. Question on this cyber liability. Obviously, we're seeing a lot of this coming out right now. And this doesn't help us with securing up. This is just in case we get hit, we're covered 5 million per claim, 5 million per annual aggregate deductible, 20,000. Is that enough? And do we need to be more robust with that? And then the next question we have for a later presentation, I don't know, when, where, but is our cybersecurity, do we need to bolster that up even more?
very good questions. Is it ever enough? That's the great question. Based on indication from our insurance broker, currently, that's what they recommend to move forward with a very low deductible, as you mentioned, for $20,000 annually. In an effort to contain costs, we actually even looked at higher deductibles. However, the difference there didn't make any kind of sense to lower that. So with all that being said, the recommended option is what you have to see here in front of you.
The experts are.
I'm a cybersecurity expert, but
Oh, come on, you know you are.
nowadays everybody is.
Yeah, we have to be.
Does anyone else have any questions or comments?
Market, I'm sure. There's so many uncertainties, and had not AIG done the decreases, it would have been much worse. So,
Ugly.
yeah.
Say,
Madam Chair.
of course.
Thank you. Alex, I just wanted to confirm, Madam Chair and I were discussing, our broker made multiple approaches to vendors for cybersecurity, but we were only able to get one to actually bid on it. Is that correct? So not only is it a question of, are we doing enough? It's like, we're not
Wants
far
to do
from
it.
being on our own here. That when you look at what's happening, their liability is just so exposed right now. So Trustee Jay, we can follow up with an overview on our current cybersecurity measures we have in place and talk about whether it's ever enough, but what we are doing, we can follow up
very
on that.
much.
Yes, sir.
So I think it's incredible that we came in under budget. So thank you for your diligence on that. And unless anyone has anything else, I will entertain a motion.
Testing.
Trustee Jay. I will entertain a motion.
I move to accept the proposal.
Testing
as
1, 2.
presented.
I'll second that motion.
All in favor?
Aye.
Any opposed? Seeing none, that motion will carry unanimously. Thank you very much.
Testing.
Lori, do we have any updates on the system here? Or are we still working on it?
Still working on it.
Okay,
I have
thank
no
you.
update.
That will take us to item 4.3, Board Memo 2021-06-29, authorization for the President CEO to negotiate final terms and execute the sale of 32 T hangars located at GA West at the Reno Tahoe International Airport at a salvage rate of $1 to Stellar Aviation of Reno Tahoe LLC. That sounds like a great deal. And negotiate final terms and execute a 10-year ground lease with 2 5-year options on 178,700 square feet of land under T hangars along with adjacent pavement to Stellar Aviation of Reno Tahoe LLC for an estimated contract value of $604,393. And I believe we are going to hear from Adam, who is a tenant.
Not only am I a tenant, but I manage a lot of tenants. So, good morning.
Welcome.
Good morning, Chair Rose and trustees. My name is Adam Tennant, for the record, general aviation property specialist. And I also have our partner with Stellar Aviation, Brad Coast, the COO of the company, with us today. And I think that this is an exciting deal for us. And the purpose today is twofold. There's 2 components to it, as mentioned: the sale of the actual T hangars, as well as the ground lease under and adjacent to those hangars. And it supports 2 strategic priorities: encouraging general aviation at both airports and financial diversification. Before I get into the business terms, I'll give you some history, because there's a lot of history of these hangars. They date back to the 1960s when they were originally constructed. We assumed ownership of them in 2010, and they were in disrepair at the time. Many of them were not in good condition at all. Some we were able to lease, some we're not. There's 9 that we still haven't been able to lease out, which is a big portion of what we're looking to get to Stellar and get online in capacity. But in 2012, we looked at salvaging those for $1 to our tax. So this is a 9-year in the making effort to get us kind of back to where we are today. And in January of 2019, we issued an RFP for a second FBO provider. As a result of that, Stellar came onto the airfield, and they have a very large development that will be happening on the east airfield. But in the meantime, they've set up temporary operations on the east side and a former FBO. As part of the agreement that we made with Stellar, we agreed to take offline the West T hangars, because Stellar will be constructing some very nice new T hangars in the near future. And to not compete against them, we made that agreement with them. due to the
Testing.
increased demand. It's kind of funny, the pandemic has really driven up demand for T hangers. It's wouldn't think it would be the case, but really is. And so in September of last year, the user committee asked us to look at bringing those T hangers online again. And unfortunately, with the original agreement we had made with Stellar, we weren't able to recover the costs in the remaining term that we had to lease the hangars. We only had until 2026. So they asked us if we would be able to look at some private sector options, which we did. We engaged both Stellar Aviation and Atlantic Aviation to do so. And then also they've started managing both the east side and west side T hangars here at the airfield. So under the magnifying glass there is the general location of the T hangars. And then on the right is kind of an overview of not only the T hangars that we'd be selling, but the land associated with the ground lease. Just so you can have a, I'm sure you've all familiar with where they are, but just for a little bit of more context. And then here you can see in the red that shows which T hangars are not currently being leased. And again, we have over 60 people on our wait list, and I think it's increased since then. So it continues to.
Testing.
So this is a great deal for the users and for the airport authority. You can kind of see the general overview of the state of the pavement on the east or on the west T hangars. This is on one side of them, and the pictures really don't do it justice. When you see it, it actually looks much worse. That one of the drain is really kind of the best picture of kind of the state of things out there. So Stellar is fully aware and capable of finding some solutions to get this pavement into usable condition.
Testing.
So, and that brings us to the proposed business terms. The first part is the sale of the T hangars. So we're going to sell all 32 T hangars to them for $1 because they're in salvage value and they're in as-is condition. And then the lease term for the ground will be 10 years with the 2 5-year options. It's just under 179,000 square feet.
Testing.
We'll have all this technology solved one day. With the capital investment of $75,000 being a minimum to help make improvements to get the pavement back into condition that would allow those hangars to be leased. And then there is a midterm refurbishment of not less than 5% of the original investment into the T hangars. And then in lieu of a traditional ground rent rate, we're actually doing a concession fee. So we'll be receiving 16% of the gross revenue on the T hanger rents from the west T hangars. And finally, the maintenance and repair of the T hangars and the pavement and surrounding area in that 178,700 square feet of land will be solely seller's responsibility. Last night, we had a very good meeting with the users group. And out of that came a couple of additional things they wanted us to consider with this agreement. So the primary thing was that they would request that the current users on the west side have a 5% rent cap for the first 2 years of this arrangement. And Stellar has agreed to this as well. And also they will have the option to stay on the west T hangars. They don't have to move to the east or move to Stellar's new hangars, and we won't, Stellar won't kick them out, and which is good. And then finally, the existing T hanger tenants will be given priority over leasing for the new T hangars over anyone on the wait list if they would like to move to the new ones when those become available. I think you're all pretty familiar with Stellar Aviation. Started operating out of their temporary FBO facility last February. Great time to open an FBO. And they are moving full speed ahead in spite of everything with FAA submittals and the new development on the east side. This west side activity is just enhancing what they're doing here at the airport. They have extensive T hanger management experience. They have a couple of airports in Florida where they have a lot of extensive T hangars that they own and operate. I won't move now. That's okay though. Let me see. Okay, So the biggest box there is what we're discussing. The other two, the hangar 2 and hangar 8, are not part of this arrangement, but just to show you the context of what Stellar is invested onto the west side, even while they're doing all of the east side development. As of February 1st, they'll lease hangar 2. Or July 1st, they will be leasing hangar 2. They already leased hangar 8, and they intend to have a fuel truck over on the west side going forward. So that'll be much better service for the west users. And in addition to that, we have a tenant in hangar 2 now that will be moving out that wouldn't share the restrooms with the users over there, but that Stellar has agreed that that is totally fine with them. So the restrooms will be moving back inside. So it's a great amenity for the users over there and gets them out of the temporary unit that was not ideal and was expensive for us to lease. So here you'll see the financial impact of this deal. The first table on the top is if nothing changes. It's our net revenue after expenses remaining until fiscal year 26. Again, because of that sunset date of June 30th, 2026. So if we continued on our current path, we'd have a total net revenue of about $270,000 and 23 hangars available for lease. With this new arrangement with Stellar, we have a potential 20-year income stream and total revenue of $604,000, and the 9 additional hangars brings us up to 32 total. So over the term of this arrangement, it's a significant revenue increase for us. And this is all after any expenses. So this includes O&M for both if we continued, and we really don't anticipate any costs because they own the hangars and the land around them. So it's a good arrangement there. And with that, it's hereby moved to approve the authorization for the president CEO to negotiate final terms and execute the sale of all 32 General Aviation West T hangars for a salvage rate of $1, and to negotiate final terms and execute a 10-year ground lease with 2 5-year options on 178,700 square feet of land under T hangars and adjacent pavement for an estimated contract value of $604,393 with Stellar Aviation of Reno, Tahoe, LLC. Happy that concludes my presentation, and Chairman Rose, happy to answer any questions.
What's the time frame on this project?
We are hoping to execute as quickly as possible. We were originally targeting July 1st, which is still a goal. We're moving very quickly. Stellar is aggressive with wanting to get the T hangars reopened, and we've worked hard to make this deal. They've been a really good partner with us, and they've already done a lot of due diligence and pavement investigation to prepare to get everything online over on the west side. So target date is still July 1st.
It's great. That's fantastic. Trustee Jay, do you want to give us an update on how the users feel about this?
Yeah, we, as Darren said, we had a users meeting last night. 2 things. One, it was the first CEO-led users committee meeting. So Darren, you did a fantastic job last night. But this is something that we've been discussing for quite some time. It's, this was discussed pre-COVID. They brought it to us. And at the time we looked at it, I know that Mary Lee Dean and I actually went out there and walked the facilities to see the conditions of it. And, it was going to be a significant investment from the airport's point of view. And, at the time the board chose not to move forward with it. Well, this changed. Brad, thank you so much for your input last night. And, it came up with a great presentation, and there was a lot of questions. I think the meeting ran about a half hour longer than anticipated, but it was due to all the questions that were asked, and they were fantastic questions. Staff was, I couldn't believe how fast, Darren's on the phone, back and forth with staff, and we were able to answer questions before the meeting even ended. So that was a good thing. So yeah, the users, RTAG and all them are happy with this. And so I would highly recommend that we move forward with this, because 63, I don't think we've ever had that many on a waiting list, have we? Yeah, that's a lot of people. And this still is not going to take care of that. It's going to make a dent in it, but that's about it. So this is a move forward. I recommend it. And Darren, I think you'll agree with me. I don't think there was anybody in opposition of it last night.
How many people are on the waiting list? did you say?
63. Yeah, I think this is doubled from last year, hasn't it? So 78. Should you be talking up at the podium under? Yes, please, and identify yourself, please. Thank you.
Madam Chair, trustees, President Griffin. I'm Brad Cost with Stellar Aviation, and in talking about, we did have a great meeting last night. I thought it was very helpful for not only for Stellar, but for all of the users to discuss this in an open format, ask a lot of questions, make sure everybody's comfortable with it. You had said before, that sounds like a good deal. I think, I don't know on our ends, but I think it's a good deal. I think it's a good deal for the users of the airport and for the GA community in general. I think it's a really good deal for them because this is going to provide some much needed capacity for aircraft to get some people into the airport itself. So we have a fully vetted waiting list as of last night. That was 63 aircraft. In addition to that, we have another 12, 13 aircraft that are VLJs, multi-engine airplanes that are looking for hangar space as well. In addition to that, we've got another 20 aircraft on a waiting list for tie downs for the airport. So if you look at the amount of aircraft that we have in pent up demand to come into Reno and to be part of our community, this is a big step forward and towards solving that. But it also reinforces our development strategy, which we're going full speed ahead on, to provide even more hangar space and to accommodate people long into the future. And I think this is a natural progression. I really think it's the right decision on behalf of the airport. We're proud to be serving the airport and be a proud partner with everybody. And, you know, I think long-term into the future, the hangars probably are going to have a couple of good years ahead of them. So we're going to put some money into the infrastructure, get some of the hangars that have been closed, opened up, take some people off that waiting list, put them in there. The GA community is going to see some movement. And I think that's a very positive thing for everybody.
I think the big thing was the big question, I think a big sigh of relief when you said you will have a fuel truck on that site as well.
Yeah, it's, you know, it's becoming in demand. The west side is becoming very popular again for some reason. So a lot of people are you know, we're feeling all of the tenants that are over there, both reciprocating and the jet tenants that are there. And the cry has been to get a fuel truck over there to provide quicker service, faster response time. And now with the Hangar 2 lease that we're entering into, I'm going to be able to have staff over there. So I'll have staff there. We're going to have a terminal open again. People will be able to get a cup of coffee, use the restrooms, very traditionally like they used to be able to do before. And we'll be able to provide service to the community over there. So we'll have not only a avgas truck, but we'll have a Jet A truck over there as well.
Excellent.
So do you decide who will receive the new hangars based on just the date of the waiting list? Is it first in?
So the date of the waiting list from the people that are on there, that will be our first go-to to fill those hangars. Some of these hangars are pretty large hangars. So some of the people that are on that waiting list are operating larger aircraft. I'd rather, I guess, to answer your question the best I can, there's small airplanes that are on there where to put a smaller aircraft into one of those larger hangars would be a little bit of a waste of space. So we may go ahead to some of the larger airplanes that are on that list that fit those specific hangars as we open them up.
Will you give the smaller planes first right of refusal or not?
We're going to keep them on the list and
Okay.
we'll ask them to look at the hangar space, but I really believe the best use for the facilities will be for the larger aircraft. You want to match the hangar with the airplanes.
And I think Trustee Gianoli also has a question.
I just wanted to compliment everyone who was involved with all of this on our own staff and Stellar. Sounds like a deal where we're going to get good for everyone, which is always what we'd like to get. So it's exciting to hear the demand that we have.
Thank you very
Thank you.
much. And I'm also, if I could say this briefly, I'm very pleased to be back in this room. It's nice to be here with all of you. And because of our facilities around the country, and I'm not proud of this stat, but I achieved platinum status on American Airlines during COVID, traveling around the country. And this is the cleanest airport that I flew into and flew out of during the entire pandemic. And I applaud everybody here for keeping the lights on and keeping the airport going. And now we're seeing a recover like I've never seen here before. I know I've shared this with President Griffin. There's some stats from a GA community where our airport literally week over week versus 2019 is up 30%. So some amazing stats. And I applaud all of you for the decisions that you've made and what you've done, because this is a huge success story. We're proud to be a part of it. So thank you.
Brad, thank you so much for being here today. And we look forward to watching this move forward. Darren, did you have something? I thought at one point you wanted to speak.
I guess I'll just say, thank you to everybody involved as well. It's a true win-win. We're balancing our capacity needs, trying to take advantage of the growth we're seeing right now, and also taking care of those tenants that are inside the hangars right now that had some great questions last night, and Brad and his team are willing to make some lease commitments to them so they have some surety of pricing, which is always, when you're paying rent on something, that's near and dear to your heart. So I think we've struck the perfect balance here. So thank you for your partnership, Brad.
Very much. And also, Madam Chair, I'm a proud tenant of Mr. Tenants.
It must be great to be a tenant and a tenant.
Thank you all very much.
Do we want to make a motion?
Yeah, thanks, the user guy. Move to accept the motion as presented.
I'll second that motion.
All in favor? Any opposed? Seeing none, motion carries unanimously. Thank you very much, Adam. Mr. Carlton, I believe the audio has been repaired. Do you want me to move back to yours now?
That'd be acceptable.
Okay.
The
Fantastic. So
test.
just,
Deanne, are you able to hear us and speak to us?
This is Deanne. I can hear you. Can you hear me?
okay, just for the record, we're moving back to 4.1, Board Memo 2021-06-27.
Deanne, can you give us a sound check from your side?
Yes, can you hear me? This is Deanne.
Yes. Thank you.
Great.
Again, let me introduce Deanne Woodring, our portfolio consultant. Also with her is Garrett, assistant of hers, and she'll be talking about our portfolio and our recommended in revisions to the investment policy. Deanne, please.
Thank you. And thank you, members of the trustees and chair. It's a privilege to be in front of you today. It's been 2 years, and I apologize for not getting down there. I also have with me Garrett Cudahy, who is our chief investment officer. Garrett joined us almost 2 years now, a year and a half ago, and has extensive experience in managing portfolios, and he's the primary portfolio manager on your account. So today I wanted to give you a brief background on market conditions, the portfolio structure, and then roll into the recommendations on the policy. And I just thought the background would be helpful. We want to address questions. So if you recall, back in 2017, for those of you who were trustees at that time, and kind of update on those of you who weren't, you brought us in to help formulate and create a long-term investment strategy for the authority, for the airport authority. And the reason for that was everything was kind of in one basket, and you wanted to create controls that you guys were able to be more agile within your portfolio structure and your investment structure to look at it on a longer term basis. And so over that period of time, and I'm going to have Randy scroll down to page 3. Over that period of time, we've had really volatile interest rates. And the key with developing a strong investment plan is to be able to balance your portfolio through those changing interest rate environments.
Deanne, this is Randy. Can I interrupt for a moment?
Yes.
The sound quality just isn't great. And in consideration that Deanne can be here on site Friday morning, we're going to just ask for your flexibility on this item, and we'll revisit it on Friday in person. I think it will be more meaningful for the committee and everyone involved.
And I agree that it might be really great for the whole board to hear it as well, because it sounds like it's important information.
Thank you for your patience and
No problem.
flexibility on this.
No problem at all.
I will see you on Friday.
Thank you very much. We're sorry we wasted your time.
No worries. Okay, thanks.
Okay, we are moving to 4.4, Board Memo 2021-06-30, authorization for the President CEO to provide temporary financial payment relief to in-terminal retail concessionaires, Parodies Lagardiere, I think is how you pronounce it, and SSP America, Inc., through deferral of minimum annual guarantee monthly installments commencing March 1st, 2021 through December 31st, 2021, reduce concession fee payments for Parodies subtenant and ACDBE operator, Traveler Gifts LLC, commencing July 1st, 2021 through June 30th, 2022, with a minimum estimated fiscal impact of $56,734, and approve concessionaire federal relief allocations from the Coronavirus Response and Relief Supplemental Appropriation Act. And we are going to hear from Shauna Carpenter. Good morning.
Madam Chair Rose, trustees, CEO Griffin. For the record, my name is Shauna Carpenter, concessions manager with the RTAA. I will be presenting the concessions relief plan. We do expect to have Aileen Martin, owner and operator of Summit Travel, on the line with us, and also Pamela Brown, Vice President of Business Development for Parodies. They were joining via Zoom, but I know they had some scheduling conflicts, so hopefully they're still with us. So the purpose of this relief is to provide support to concessionaire partners and alleviate the financial challenges while they extend hours of operations in order to properly ensure R&O passengers have a positive travel experience. The recommendation, as you see here, includes 3 parts. First, the temporary deferral plan for Parodies, Lagardère, and SSP. This is a deferral of monthly minimum annual guarantee or MAG payments beginning March of this year through December 2021, with an estimated deferral amount of just under $490,000. Second is to reduce the monthly concession fee or gross revenue payments required by our local airport concession disadvantaged enterprise or ACDBE operator Summit Travel for July 2021 through June of 22. And this is a minimum estimated impact of approximately $57,000. And finally, to approve the Coronavirus Response and Relief Supplemental Appropriation Act, Allocations, which we will refer to as CRISA. This includes $463,000 for in-terminal concessionaires and rental car operators. And the relief recommendation is in support of RTAA Strategic Priority 6 to provide a positive environment and experience for all. So we'll go through a bit of background that has led us to this point, which we're probably all well aware of, but just to revisit it quickly, we began seeing the impacts of the pandemic on March 14th of 2020. There was a drastic decline in passengers and air service was which was followed by state and local mandates for closures or strict operational requirements. With this, we began receiving requests for rent reductions, waivers, and deferrals. So as you can see here, the first round was a 90-day deferral. This was based on requests, obviously, and also including FAA guidance pertaining to the use of CARES funds. So this was approved by the board on April 20th of 2020, and it included deferrals for airline landing fees, terminal rents, racks, rental car operators, and in-terminal concessionaire MAGs. Tenants were required to be current, have a current account status in order to qualify, and it was for approximately $3.9 million in deferrals. All concessionaires who did take advantage of this deferral are now current or have credits due to them as part of their annual true-up process. At the time, RTAA also began being flexible with obviously those closures, and they were the result of company directives or other mandates. We also supported limiting hours of operations while R&O concessionaires started to react to the immediate decline in passengers. We also identified additional temporary parking space for our rental car operators, and we identified space and allowed the use free of charge for a temporary period of time. So this was followed by a in-terminal small business MAG waiver for in-terminal small businesses and operators. This was for July of 2020 through December of 21, and Subway and Fuel Rod are still taking advantage of this. I skipped the part where this was extended by CEO Griffin on March 10th of this year. So originally it was through December of last year and has since been extended. It is now through December of this year. Again, Subway and Fuel Rod took advantage of this and are paying % of gross only and are not held to that MAG obligation. And this small business relief later included a 50% space reduction for Summit Travel, again, our ACDBE operator. This began in November of 2020 and was updated when CEO Griffin extended it to include 100% rent waiver for May of this year through December of this year. It is important to note that the space lease agreement we have with Summit Travel is the only direct lease we have with them as their subtenant of Parodies. So the original impact when we first brought it to the board in August of last year was estimated at 28,000. However, passenger levels and forecasted employments have exceeded and their performance have exceeded expectations. Therefore, the estimated impact, including the extension of those MAG waivers and the space rent waiver, is now updated to just under 22,000, so lower than we initially anticipated. And moving on, the last background here with previous relief was approved on November 12th of 2020. This was for a reduction to Parodies monthly MAG installments, equivalent to the monthly decline in passengers year over year. So this commenced on November 1st until the earliest occurrence of the cap of 150,000 or enplaning passengers equaling or exceeding 75%, or June 30th of this year at the latest. The amount was applied to cover MAGs for November of 2020 through February of 21, when they did meet that cap of 150,000. So it actually resulted in a partial reduction for the month of February. The intention of this relief was to make sure we aligned their reduction with other concessionaires, especially SSP, who does have a MAG abatement provision built into their contract. And it is important to note here that MAG installments for all concessionaires who did, including SSP, who did have that MAG abatement provision, were reinstated in March of this year. As you can see here, the enplanements exceeded 75%, where March of this year enplanements were over 26% above March of 2020 enplanements. Again, in reviewing the relief considerations, our goal has been to maintain airline rates and charges throughout the course of the pandemic. Per the terms of the airline agreements, it is our obligation to maintain non-airline revenues. And this is why most of the concessionaire agreements do have those MAGs built into them to ensure revenues. Some in-terminal concession agreements, again, did have those MAG abatement provisions requiring the waiver or reduction of MAGs when enplanements declined. The specific terms in those vary as they're part of negotiations with the individual contracts. But through all of the decisions, it has been important to consider all agreements and, of course, ensure fair treatment of our various tenant types. Of course, also acknowledging that they have been challenged in different ways, and the recovery of all operators here has varied a bit. Previous relief has been covered by non-airline revenues that were exceeding budget. For example, public parking revenues worked to balance out previous relief. And as part of all relief considerations, reopening and extending the hours has been required to ensure passengers have a positive travel experience and adequate offerings. So we now have federal relief funds to consider. Previous CARES funds have only allowed airports to recover operational expenses. So there was not any opportunity to give allocations to concessionaires through the previous CARES Act. So again, there was no mechanism specific for concessionaires until the CRISA Act, which was signed into law on December 27th of 2020. And the RNO specific amount for concession relief is $463,098. There's been extensive FAA guidance on this regarding eligibility requirements and directions on administering the allocations, but I've outlined some of the key components here. So first, it's important to note that these federal funds are intended for direct in-terminal concessionaires. So, and rental car operators. In some cases, if a public parking is operated by a third party, it would go to cover those as well. So in our case, we're just looking at in-terminal concessionaires and rental car operators. The allocations are, again, direct concessionaires. So although there is some guidance that includes focusing on ACDBE operators, Summit Travel and our other ACDB operators are subtenants of SSP and Parodies. So we don't have an opportunity to really change the allocations to support them directly. Concessionaires must remain a going concern. We've done a lot of research and had some guidance on this. It means essentially that there is still expected to remain operating. So if someone were to close or indicate that they didn't intend to continue operating here, they would be excluded from the allocations upon terminating the contract. And they also must be willing and able to provide minimum acceptable services. So the RTAA went a step further to require concessionaires to open per their contractual obligations by May 22nd. And although staffing shortages, which I hope everyone is aware of, has posed an added challenge to fully reopen the concessions, but all concessionaires have made significant progress in reopening and continue to extend hours as staffing allows. The requirements specifically exclude any concessionaires from receiving a CRISA allocation if they have received a second draw from the Small Business Act, which is the act that includes the Payment Protection Program, or PPP. And finally, here, airports are also permitted to retain a 2% of the allocated funds as an administration fee, which we do not intend to take. So we have the slides showing the actual breakdown coming up in just a moment, but we would like to also note that the next round of federal relief through the American Rescue Act of 2021 was signed into law on March 11th of this year, but the allocation specific for airports has not yet been released. We hope to see them any day. But it is expected that this round will include a larger amount of funds for concessionaires, and it is expected to exclude rental car operators in this next round. Going back to the CRISA allocations, you'll see the breakdown here. Again, this is based on the percentage of rents and fees paid during a pre-pandemic normal period of operations. It includes relief for rental car operators and is only available, again, for direct tenants with a concession agreement with the RTAA. All concessionaires were required to certify eligibility, again, with the PPP, and this has excluded Zoom, our vending operator. They are not eligible since they did confirm receipt of those funds. You might also notice that Subway and Fuel Rod are not included here, since they did get a previous relief outside of the federal relief funds, and those amounts were more substantial than what they would be allocated based on this breakdown.
Can I ask you a quick question before you switch slides? How did you decide the percentages?
So the percentages, there was guidance from the FAA based on a specific period of time pre-COVID that we were to take all rents and revenues paid to the RTAA from the concessionaires. So we looked at a couple different baselines, a couple different quarters to see if there was any variance in performance, but it remained pretty steady regardless of which period we were looking at. It was reports taken from, we used the first quarter of 21, which again was similar to previous quarters that we looked at. And all of the rents and fees paid to the airport authority during that time then gets us to the breakdown of allocation here. And again, with the 2%, although we do have the option to recover a 2% admin fee, all staff has agreed that is important to allocate all funds possible to the struggling concessionaires. So we've not included that in the allocation. And one last note on this, I mentioned it briefly already, but should any concessionaire or rental car operator become ineligible for these federal relief funds based on not reopening, not extending hours of operations, indicating leaving the airport, we do have the opportunity to redistribute the funds allocated to them to the other concessionaires based on these percentage breakdowns. And allocations will be applied in the form of credits and not cutting checks directly to the concessionaires. So the reason for this is that funds are required to relieve MAG or rents due to the RTAA or airport sponsor. And so staff will actually be applying the credits in these amounts to invoices that they directly owe the airport authority. Moving on to the next part of this, which is the MAG deferral recommendation for Parodies and SSP. As a reminder, all MAGs did fully reinstate in March of this year. So we are suggesting this deferral begin March through December of this year. The deferral estimated total again is just under 490,000. And the intention here is that we will defer these amounts. It's not a waiver, just a deferral. That first, any federal relief allocations from CRISA or ARPA or any subsequent acts would be applied to the deferred amounts. So this actually brings, just with this first round of CRISA, brings the total down to about 403,000 as the estimated deferral. And the remaining balances will be due in full by June 30th of 2022. Or should the next round provide more substantial relief, any excess funds would be allocated would be applied to SSP and Parodies accounts, again, to pay other rents or fees due. So we will go into more details on this, but the next part of the recommendation is summit travel relief, which we will deduct from Parodies MAG obligation to the authority. So we'll talk about that a little bit more. Moving on to summit travel, in distributing the CRISA allocations, there's not a mechanism to allocate funds to subtenants. Therefore, we are recommending that we reduce the concession fees due by summit travel to a flat 10%. So we've already discussed that the RTAA has reduced summit travel's rent as the only direct lease we do have with them, and that's 100% waived through December. But Summit sublease with Parodies does not include them to pay MAG, but it's important to note that Parodies is required to pay MAG, hence why the relief provided to Summit will be reduced from Parodies MAG obligation. So Parodies and in turn Summit Travel has specific concession fee requirements per their contract. And Summit Travel primarily sells goods in the three categories listed here: travel essentials, souvenirs, and grab and go. So an actual weighted gross revenue blended average is about 14.7% that Summit Travel pays to Parodies through their agreement and therefore is paid to the RTAA. So the recommendation is to reduce this fees to a flat 10% for July 2021 through June of 2022. And Parodies is grateful for the support we are recommending to extend to Summit. And after discussing with Ms. Martin and both parties and RTAA staff agree that the relief is meaningful and will help support their recovery. So looking at the fiscal impact here, in reducing Summit Travel's concession fee to a flat 10%, the minimum estimated impact, as you see here, is just about 57,000. This is based, on employment forecasts. It could result in a higher amount if employments exceed the forecast. That would also obviously result in additional revenue to offset that. Again, since Parodies is held to the MAG obligation per their contract with the RTAA, the actual relief will be determined on a monthly basis and deducted from Parodies' MAG obligation to the RTAA. This would be determined on a monthly basis by taking the concession fee they would be paying based on the category breakdown and less the flat 10% they pay, and that would determine the amount that will be reduced from their MAG obligation. With that, it is recommended that the board authorize the president and CEO to provide temporary financial payment relief to in-terminal retail concessionaires, Parodies Lagardère and SSP America through deferral of minimum annual guarantee monthly installments commencing March 1st, 2021 through December 31st of 2021, reduce concession fee payments for Parodies subtenant and ACDBE operator, Traveler Gifts, commencing July 1st of 2021 through June 30th of 2022, with a minimum estimated impact of $56,734, and approve the concessionaire federal relief allocations from the Coronavirus Response and Relief Supplemental Appropriation Act. That concludes my presentation.
Thank you, Shauna. One quick question. Are we asking for any minimum hours?
Yes, so we did put out a requirement to open per contract obligations, which would essentially be to service all outbound flights. When we set that requirement in place, we didn't really understand the full realm of challenges that they're seeing with staffing. So we are still remaining a bit flexible in the hours of operations, understanding that there's simply not the staff to open all outlets to serve all flights. But we are working with all concessionaires to make sure that they have the hours of, or the level of ops reports, and are able to form their schedules based on actual passenger levels. And so they're continuing to extend the hours as staff is onboarded, essentially.
So, but do we have a minimum hours they have to be open each day in order to receive the relief? Is it 5? Is it 6? Is it 8?
So we have required that they have essentially adequate offerings. That, for example, SSP has Timberidge open for all flights, and then the bars on either concourse open during peak hours. So we are requiring, yes, the outlets are open for all flights, but it's just not all outlets. So they're making sure they have adequate offerings, and then kind of supplementing where they can to open additional outlets to serve those peak travel times.
Okay. Does anyone have any questions? Thank you very much. Sounds like we're moving forward on this. I'm sure everyone's very grateful to get some relief. Thank you for all your hard work. I know, Tina, you worked hard on this as well, so thank you. I'd like to entertain a motion.
Move to approve.
Can anyone hear me? Before the motion goes, may I speak? This is Aileen Martin, East Matthews.
Okay, we're just going to get a second on the motion, and then we'll allow for additional comments.
I'll go ahead and second so we can discuss.
Okay, please proceed forward with your question.
Aileen, can you hear us?
Yes, I can. Thank you.
We're ready for you.
First of all, to the board, Shauna, and everybody, thank you so much for taking under consideration our needs and hardships through this pandemic. President and Director Griffin, thank you very much for taking under consideration. I'm Zoom naive, you guys, I'm sorry. Anyway, with that said, with the 14%, that the 14.7% base, that, and then it reduces down to 10%, which reflects a 4.7% savings. It's not a lot of money that's going to be saved by us. To date, we've paid out in just rent sublet contract 148, just shy of $149,000. So $56,000 reduction that through federal fundings will be paid. We're not saying, I'm not understanding how we're going to have any savings or reductions when we're operating full capacity and staffing challenges and the night flights where we're losing money. So I need to, again, I don't want this to sound like we're not appreciative, but when it comes down to 56,000, and that's the minimal, we don't see a savings there.
Yes, Shauna, could you clarify one thing for me first, though, please? So is their 4.7% reduction the only relief that they're receiving, or are they receiving other relief as well?
They're receiving the space rent reduction, which is 100% waived. Again, that's the only contract directly that we have direct control over. So that has been fully reduced.
So their space rent is zero, plus in addition to that, the 4.7% savings? Thank you for clarifying. Go ahead.
Thank you. So I just did want to point out that the estimated savings there for Summit Travel is a minimum amount. So if employments exceed that, we're not suggesting a cap on that. It would be the minimum amount, which is likely that it could very well exceed that. In addition, if, again, knowing that the federal relief funds, this is not funds paid through those federal relief allocations. This is directly supplemented by, the airport authorities bottom line. So we have to balance those savings. But in addition, if the federal relief funds do exceed for Parodies, if the next round of allocations exceeds the delta that they have between their percent of growth and their MAG obligation, they will then start disseminating any additional funds to subtenants. So that would be Summit Travel and In Motion in that case. In addition to that, we don't know the guidance through the ARPA allocations. So there is some talk that could include additional funds that we might have the opportunity to allocate to smaller ACDBE operators or subtenants. Without knowing what the next round will entail, it's difficult to make a judgment call on that now. So obviously, if passengers do not perform as expected, if something were to happen, we would bring this back and revisit the relief. If it doesn't provide meaningful relief in the long run, we would absolutely bring this back and make another recommendation. But again, it will be dependent on what we can do with the next round of federal relief funds.
Just one more question for clarification. So if the 4.7% reduction is funded by the airport and not federal funding, is the zero space rent also funded by the airport, or is that federal funding?
That is also by the airport. Yes.
Aileen, is there another comment that you'd like to make regarding Shauna's response?
Again, we're not, I really don't want this to sound like we're not appreciative to everything that the airport, the director, Shauna, and all of the talks and negotiations that have commenced. So we do appreciate the 100% relief, which just has gone into effect. It has not always been 100%. It was half, and now it's 100% for the space. And that's roughly $1,000 a month savings. But a big part is the store. For example, to operate the midnight flights, we look at minimum of 68% loss just to accommodate departing customers. That may or may not spend $5 or may not come into the store. You can't guarantee any of that. So that's what, the 4 point, and I don't want it to come across like I'm not appreciative. I'm just thinking that, how the numbers have been come to by the airport finance, that maybe we need to look at this again. I don't know. I mean, if we're set at 10%, thank you. It's better than a sharp poke in the eye, as my mother would say.
So Shauna, if we approve this today, do we have the ability to revisit it in the near future to make sure that it's been a fair assessment?
Absolutely. Our next round of federal relief funds, as soon as we get guidance and allocations on that, we will be bringing that back to the board for approval of those allocations as well. At that time, we can also include a little bit of background on what the actual amounts have been to get an idea of what has been provided. And obviously we'll have additional data at that time to determine if the 56,000 is a realistic estimate, or if passengers are exceeding expectations, there's a possibility that it would be substantially more than that. So certainly we can include that in the discussion with the next round of relief.
The other question I would have is, do we have the ability to offer additional relief for tenants that are staying open more hours? Do we have some kind of an incentive there built in for them to stay open and get more relief?
We don't currently. There's been, again, it's a little bit challenging in that some of the operators are held to that MAG obligation. For some of the subtenants through their sub agreements who are not held to that MAG, it's just it's difficult to find a balance. We can certainly look at something, but there's just as it currently stands, there hasn't been really an opportunity to manipulate the funds in that way.
I totally understand. I will just say, on behalf of Aileen, if you're going to stay open more hours, it's going to cost more money just because we're having to pay more to get help than we used to. And, you know, there's not a lot of traffic here at midnight. So it does seem to me, and of course, I'll leave it up to you guys because you're the experts in this, but it does seem reasonable to me that people that stay open more hours, and particularly during off-peak hours, should maybe receive different relief than others who are not doing that because their expenses are going to be higher. So that's my 2 cents. I think we have a first and a second, and Richard, Trustee Jay would like to speak. And Sean, if you want to reply to my comment,
Yes, ma'am. Thank you.
I'll give you an opportunity.
Thank,
I have a question. Prior to COVID, we had X amount of passengers and X amount of spending. Now that we're coming back, are we seeing that same ratio? Are people spending more or less or about the same now than?
It's very split. So for example, McDonald's is an ACDBE operator as a subtenant of SSP. Different scenario, they have received other relief funds through a specific restaurant act and PPP. But aside from those relief funds, they are actually performing close to 2019 figures. So there's a pretty significant difference in, you know, food and beverage, fast food versus sit down and especially retail and those other offerings. So it's difficult to answer directly.
No, I get it.
There's a lot of factors to consider there.
And is there anything we can be doing as an airport to help maybe, you know, incentivize people to spend more, you know, putting signs out, spend more, we need your, you know, they need your, I don't know what, but I'm just, you know, trying, you know, being mindful of these operators here and doing whatever we can. And I totally agree with ones that are staying open longer hours. What can we do for them as well? Especially that midnight one. I mean, we need something, but it's a tough call. And, you know, labor costs and labor shortages right now, it's just, you know, it's kind of a, you know, witch's brew of everything.
So I'm curious to know, do our airport concessionaires qualify for the same federal funds that regular small businesses qualify for, or are they in a completely separate category because they're on an airport? So for example, do they qualify for the employee retention credit that was just released, which is a lot of money, or is that just off the table for them because they have to go through the airport funding relief?
I believe that one is not approved for them, but there are various relief efforts that do. Pam has a comment there, so she might have more information on that specifically, but I do know that, for example, like the PPP funds was a requirement that it was a small business, which I believe that cap was 300 employees. So there's different requirements for all of the relief funds. For example, the food and restaurant specific act was available for all restaurants regardless of where they were located. So it varies by relief. Yeah.
Pamela, did you want to speak?
Sure, I'm happy to speak to that if you'd like. And the short answer is that while our various contracts are separate joint ventures, we take these things very seriously and reviewed it very carefully. And the bottom line is we did not qualify for payroll reimbursements or small business financing or other things, you know, that were later waived through this pandemic. And most of the other major prime concessionaires did not either. That's part of the reason Congress passed the additional acts, both the CRISA and the ARPA, to assist concessionaires specifically.
Pamela, was that because you didn't qualify based on size or revenues or other things, or was that specifically that you did not qualify because you're located on an airport?
Yeah, it was the other qualifications, the size of the business. Now, we saw some big companies, big franchisees somehow go after and get these monies early on, but they were generally shamed into giving it back, street side companies. But the fact that we're in an airport was really not the disqualifier for us. What it did, though, to us was it created a situation where we really needed to be here for those essential flyers and be open and available to serve them. Whereas a street side store, when things were pretty well shut down, they could shut down and at least stop the bleeding outside of rent payments, maybe, that in most communities were also deferred or even waived or whatever. But for us, the situation was unique being in airports. And I think that's why Congress heard us loud and clear. You know, my company in particular, we made a very serious commitment from day one to keep as many stores open as we could and to reopen aggressively. Our goals being to serve the public and also to serve the employees in the airports, the airline employees and airport employees and others who needed to be there to serve essential travel. And to save jobs, to save as many of our people as possible and get them back to work as soon as possible. So we've been very aggressive. We were the company here that's been open from day one of this pandemic. We had something open. We expanded our offerings at Vino Volo because the food and beverage operators were not open when we were. And we lost money, but we made the decision to lose money on an operating basis to do the right thing. And frankly, our biggest challenge here has been the MAG. And while I appreciate the lengths that staff went to for the $150,000 in relief, even accounting for that, in the past 14 months since this started, we've paid over $500,000 in MAG over what our percentage rents were. We paid and reported on percent rents every month. In the first 3 months of the pandemic, our MAG was greater than our gross revenues. So it's been a very tough haul, but we stayed open. We made the decision to do that. We begged for additional relief. We're thankful that the CRISA money has come through. We fell into a unique, frankly, kind of a crevice here because our contract didn't provide for MAG relief when employments dropped below a certain threshold, whereas other concessionaires did, or they were given MAG relief because they were DBEs. So we probably took the greatest beating in all this, but nonetheless, we've kept our stores open and we've been aggressive about doing that.
Okay, thank you very much. I do just want to say that I know that the executive team at the airport and the staff and all of management take the relief of our tenants very seriously. And I'd like you guys also to know that the full board stands behind your relief and making sure that we take care of you. So I think for me right now, I'd like to get this through this committee today. I think that the full board needs to make a final decision on this on Thursday, which is how this works. I'm sorry, on Friday. For so many years, we've had this board meeting on Thursday. I'm hope I'm going to show up on Friday at this point because I cannot get it in my brain. But we do take it seriously, and I do believe that the staff and the management team here looked at this very closely, and they did a lot of work on this. I think we clearly need to have more conversation. I think we need to hear more from you guys on what you feel you need and what you feel is fair, but we also have to take into consideration that the airport obviously has to operate as well. So I think we need more discussion on this going forward. But for today, I'm going to go ahead and take the vote on this now. So all those in favor?
Aye.
Aye. Any opposed? Okay, that motion carries unanimously. Thank you both for coming today to speak and shed light on how you guys feel about this and what you need from us. We appreciate that.
Thank you all.
Item number 6, member comments, questions, and requests for future agenda items. I'm sorry, number 5, items for discussion and or possible action. We have none. Now item 6. Member comments, questions, and requests for future agenda items. Does anybody have anything that they would like to say or for us to put on a future agenda item? Okay, seeing nothing. That will take us to number 7, our monthly administrative reports. They've been provided to everyone for reference. If anyone has any questions or needs further information about items 7.1 through 7.6, speak now or forever hold your peace. Fantastic. Public comment, please. Lori, do we have any public comment?
We have no public comment.
Thank you so much. That makes us adjourned, and the planning committee meeting is coming up in the very near future. If you'd like to hang out, because we know this is very exciting, we'd love to have you all. Have a nice week. I'll be here on Friday.
Say it to yourself 10 times Friday.